December 28th, 2023. A lot of times at the last week of the year, you get very small days. So between Christmas and New Year's, you a lot of times will get very small range days. And I assume it's just because there aren't as many algorithms running because a lot of the firms are closed or something along those lines. Um, but yeah, so if you're trading towards the end of the year, you just need to be aware that a lot of times in the last week of the year, you're going to get really small days like this. Like the range of today was 12, and that's really unusual. But for the last week of the year, it's not that unusual. I thought this bar was kind of important coming into the day. When at the end of the day, when you get a big bar like this and the moving average isn't going to have time to catch up, it's the next day is going to kind of function as a gap up almost, even if it doesn't gap up. So like today, there's actually a small gap down, but it still kind of functions as if there was a gap up from here to here as far as the moving average goes, because you know it's you're opening so far above the moving average, even though you're opening or you're opening decently above the moving average, even though you're opening towards technically with a gap down. So I just thought that that's kind of how I thought of it this morning. So I thought that we were probably going to have to go sideways to down and test the moving average. Bar one, bull bar, but a failed breakout of yesterday's high. You can see we tried to get there and we got a failure. And the daily chart was pretty important because we're in general pretty overbought. Could be one pullback, two, and we could be getting a second leg trap up here. By the close bulls, we're really hoping to get good follow through for this bull bar today, and you can see they really didn't get it. So what was really important, this breakout was really important because bulls wanted to see essentially a big bull trend day today and confirm the breakout that they were trying to get with yesterday's close. Two, an inside bar. Can you buy above two? Maybe, but it's really not all that great. I think right after a failed breakout, it's pretty risky to be trying to buy. You're also, you're really risking buying at the top of what's definitely a trading range. So it's really not all that good. And then you get three, a big outside down bar. When you get three, it's notable that the tail on three, this is again, it's a second failed breakout. So it's a micro double top, but it's two failed breakouts of yesterday's high. And generally, when you try to do something twice and you fail, you're probably going to try to do the other thing, which is what's going on three. But there's a big tail on three, so it's not all that great of a sell. And there's so probably buyers below. And one and two is probably big enough for a second leg. And this is most likely a trading range open. So the traders who bought the close of two are probably going to be able to get out around break even. Buyers below three, you can see right below three on four. So four is important that it didn't trade below one. So we're technically still on the buy above two because the stop would be below one and never got run during four. Four is double bottom with one, and the neckline of the double bottom is the three high. But I don't think it's a very good buy above four. If you're buying above four, you're hoping that we get a big, strong bull trend day. And if you're buying above four, you probably also bought above two because your premise, it was probably a better premise, but to buy above two, hoping for a big trend day, than it is to buy above four, hoping for a big trend day. It's really unlikely that it's going to happen. And when you get five, is that really what you wanted to see buying above four? Four is a low probability trade. And if you're taking the buy, you're hoping you're going to get a pretty quick swing up and you want pretty explosive follow through. And you want bars that look exactly like this, and then you get five. It's really disappointing. So I think a lot of those traders are going to look to exit. Additionally, you get five, and you know that the traders who bought above two are disappointed, and they're going to be looking to get out around break even. And you can see this is their entry price, and it went one tick past their entry price, letting them out at break even. So what happened here was, instead of buying more up here, traders who bought here, maybe they scaled in lower somewhere down here, or they bought more above here, but they all ended up exiting around break even up here. So traders who bought above four were hoping that we were going to end up getting a rally and these traders would buy more, and instead they sold. Seven, a bear bar with a decent close. Also, sorry, I've been traveling for the past week and I definitely got COVID, so that's why my voice is weird today. Seven, a bear bar, but a tail on the bottom. We'll probably at least get back to the six low at some point, and then potentially the six close. Follow through on eight, back down to the three low. So the bears who sold below three or the low of three, it wasn't a good thing to do, but it was probably logical. And you can see that they were able to scale in higher, maybe more at the close of the bar. They probably would have continued to scale in higher if we had traded above the bar. And they're getting out around break even here. You can see a lot of them even took a one tick loss because if they sold below, they got trapped immediately, and they were just happy to get out with a very small loss, and that's causing the buying on eight. Doji bar on 9, probably sellers above 8, but you're at the bottom of trading range. Don't really want to sell above anything. 10, more follow through for the Bears. Or sorry, more minor follow through for the Bulls. It's essentially a triple bottom, some sort of wedge, 1, 2, 3. But Bulls are hoping that this is a spike and this is the pullback, and then we're going to get a big bull channel. But it doesn't seem all that likely. It seems a lot more likely that we're just at the top of a trading range. So 12, or I think 11, bull bar, but probably sellers above. You're buying right in the middle of a trading range. Follow through for the Bulls on 12, but now you're buying the top of a trading range, and we haven't broken out of anything yet. This is a channel, essentially. Doesn't really look like it, but you can see 11 and 12, or sorry, 10 and 11 is essentially a channel. And 12 is a big bull breakout above the channel. And if you're going to buy a breakout above a channel, you probably want to get good follow through first. And if you're buying above 12, you're buying right where bears have been selling. And you're trying to buy this breakout. This breakout's already failed twice, and you're trying to buy it for a third time. So I don't really think it's very good to be buying above 12. Disappointment on 13. You can see there were sellers above. And then inside bar on 14. Do you sell below 14? I don't think you should sell below 14. I think that, it's a low one at the top of a trading range, but I think selling above 14 makes a lot more sense. And what's fun is you can see that if you sold above 14, this is your entry price. And what's a reasonable scalp, right? What's the opening range size? 6 points. So it's logical to think 2 points is a reasonable scalp. And if you sold above here, then you got bar 15. It traded, I believe it traded down first. No, it traded up first and then sold off. So if you get during bar 15, you can see the traders were able to make exactly 2 points around the 15 low and exactly the 16 low. So traders started taking profits at 2 points, and that's what caused the rally up on 16, is bears taking profits. And it's important to note that because that means there aren't as many bulls buying up here, more than likely. This is more likely just bear profit taking and probably just a second leg up. Does this really look like the start of what's going to be a massive bull trend? Trends get weaker as they go. So is this what you want to see as the start, and it's going to keep getting weaker as it goes? Is this good? It's really not. There's big tails everywhere. There's 1, 2, 3 dojis essentially in the trend. You could argue 4 dojis in the trend. So it's really not all that great. 17, a bear bar, but bottom of a tight trading range. It's potentially a wedge top, a second leg trap, 1 pullback 2, and then you could sell below 17, but it's more in a tight trading range. And there's a big tail on the top. I don't think it's all that great. Big bear bar on 18, but disappointing follow through. A reminder that we're still in a trading range. Follow through on 19, but not all that good. And then, bears were hoping to get a big sell to close bar on 20 and maybe start to break into a deep bear trend, big bear trend. But, you can see we got to the low of the day and bulls bought it, expecting that this is going to be a trading range because there was tail here, tail here, tail here. And they're expecting a tail on this bar as well, and the bears to fail. And that's what happened on 20. And it's important that 21 traded above 20 because that's a pullback. And if you're getting a pullback this early in the trend, bears want this to be a big bear trend. And if you're getting a pullback this early in the trend, it's probably not a very good trend. And with all the big tails, it's just really in general not that good. You'll probably get a second leg down, but it's just not great. 22 is that second leg down, but it's too big of a bar to sell. It just looks like a big second leg trap. Broke out below the low of the day, but needs follow through, and you don't get it on 23. 23 ends up being a bull bar with a big tail on the top. 24, a bull bar, so we have an II pattern, but a big tail, again, not all that great of a buy. Bad follow through on 25, and this bear channel is pretty tight. 26, maybe you can buy 26, but the channel is pretty tight, so it's really not all that great because at best you're going to get a minor reversal. If you're buying above 26, you're almost certainly going to be disappointed. It's a trading range day, and stop order traders are going to be disappointed, and the channel is pretty tight. It's really, really unlikely that you're just going to get a big bull surprise bar here. And even if you do, traders are probably going to scalp it. This is what you're most likely going to be in for if you're buying above a bar like 26. Follow through on 27, but it's not ideal. Big tail on the top, an inside bar on 28, an inside bar on 28, but a doji, doji again on 29. So if you bought above 26, is this really what you wanted to see? It's probably what you expected to see. And traders are going to be disappointed, and they're going to start to scalp out, and that's causing 30. Bears see a 2-legged correction, and they want, essentially the low 2 below 29 to work and to get a sell off, essentially a second leg from this, but, it's probably not going to happen. And then disappointment 31, big outside up, traps bears into a bad trade, and we get a big reversal up. But again, it's a trading range day, and now you're buying high in a trading range, and it could be 1 pullback, 2 pullback, 3. So a third leg up pretty high in the trading range, you're probably going to be disappointed, which traders were on 32. And if you bought above 31, you get 32. You're going to exit around break even during 33, which is exactly what happened. Bad follow through on 34. Probably buyers below. Bears were hoping this was a wedge to 33. You get bad follow through 34. Doji 35. So anyone who sold this close, disappointed in this, is probably getting out around break even. Inside bar on 36, but it could be a second leg down. So 1 pullback 2. So essentially 3 pushes up and then 2 legs down. So 36 not all that great. Probably better to wait to see if we get a big follow through bar, and then you'd have consecutive bear bars and you can maybe take a sell. And you get disappointment on 37, bull bar with a good close, but again, still high in a trading range. It really just looks like a bull channel at this point. And if you're in a bull channel, you want to be buying pullbacks, not necessarily at the highs of bars. And if you're buying 37, what's been happening with all the bull stop entries today? Disappointing, pretty disappointing, super disappointing. So what do you think is going to happen? Disappointing entry bar, disappointing follow through 38, 39, and a failed breakout above the high of the wedge on 40. And it's really hard to hold long through that because you probably have to get out below 40, but you don't want to buy again above 41. So it's a tight bull channel, or it's not that tight. It's more of a broader bull channel, but it's really just not all that good. And then you get 42, and bulls end up dumping all their longs. 43. 43 was a chance for the Bears. They were hoping they were going to get something here, but if you saw, we ended up going down first, because what happens is you get a big tail on this bar, and Bears will see it as a pullback, and they'll sell to the close of this bar for a scalp. And when they did that, they got back down to here, and they just scalped out, took 3 points. So they sold this close, and they scalped out with 3 points, and then we get a big reversal up 44. Big up, big down, big confusion. I don't think there's really anything here that was all that good. Bad follow through 45. You have to expect buying in the middle of a trading range. 46, follow through for the bulls. 47, follow through for the bulls, but you're right at the 42 low, where you know that the bulls who bought below probably did a reasonable thing, and you get out of break even. You can't buy any of this. 48, essentially a low 2 below 47, but not all that good. You could argue it's low 1, but I see this as 2 legs up. 49, probably just a third leg up, and you can see the bulls tried to get a breakout on 50, but it was a surprise up, and when you're getting in trading range like this, a lot of the traders will scalp the surprise, so they just scalped out of the surprise up here. 51, again, disappointment, and if you bought above any of these bars, you were hoping we were going to get this breakout, and then when it fails here, a lot of the traders exit the market. That causes 51. 52 is a second leg, so 1 pullback 2. And 53, trying to test, essentially this close. So 54 is 2 legs down. It could be 1 pullback 2, I suppose, pullback 3, but it could also just be 1 pullback 2. And 55, again, all the big bull stop order bars today. If you've been buying those, you've been getting killed, most likely, unless you've been really fast to get out. You've probably just been getting killed and losing money all day, and you shouldn't expect anything different. And again, disappointing follow through. A couple legs up, and then you get 63. 63 is in a tight trading range, so I don't think it's really all that good. You could argue it's 1 pullback, it's 2 big legs up, and you sell below 63 hoping for a move down, but there weren't really very many magnets below. So I don't think 63 was that great of a sell, and that's why you get bad follow through 64. I think it's one of those trades where you take it and you win it enough that you'll probably keep taking it, but I don't think it's really making you money. It's probably actually costing you money with these kind of trades. I don't think it's really all that great, because a lot of times you're just going to end up taking a 2 or a 3 point loss here pretty often. I mean, how often are you expecting? I mean, if you took this trade and you made 5 points, let's say you did the absolute best thing, right? Because the reality is, if you took this trade, you're probably newer, I would assume. And because if you took this trade and held, there's no way that I should say, if you took this trade and you're newer, you probably either got out really quickly with a small loss, or you got out basically here above 70 with a couple ticks of profit. It's unlikely that you scalped with 5 points. If you did, good for you. But I think scalping with 5 points was the correct decision here, because it's a bear channel and a breakout below the bear channel here, and the attempt fails. And you know it's probably going to fail because it's a trading range day. So that's why a lot of traders scalp with 5 points. But my point being, you get bad follow through, and it's really hard to hold through all of this. And you didn't end up having to exit above anything, but I think a lot of the times with this kind of trade, you're just going to end up getting stopped out or have to exit above something and just lose money. And I just don't think it's very good. But anyways, I don't really think there was any good stop order trades today. I'm sure there were good limit order trades, but really not a great day for stop order traders. And daily chart, we're pretty overbought. We're towards the top of the overall trading range. Let's look at the yearly chart. Actually, that would be fun. Set that up right. Oh, that's because I'm using this. Max it up. There it is. On the yearly chart, since tomorrow is the last trading day of the year, you can see we're in a pretty tight bull channel and we got a deep pullback. This pullback is probably enough for a second leg, and I would imagine there are sellers above here somewhere. So I don't think next year is going to be a big bull bar. It'll probably be some sort of, it'll probably either be some sort of smaller bull bar or smaller bear bar. I doubt that we're going to, we could get a big failure above this bar and then a big bear bar closing somewhere down here, or trading down and letting these bears who sold this close out at break even. Because I don't think selling this close wasn't really reasonable. But I think, it's reasonable to think the traders who sold down here are going to be able to scale in higher and get out of break even, I guess is what I should have said. But I think that it's possible too. This is actually more the point I was getting at. If you bought this close, you're probably disappointed in this. So there are probably going to be sellers somewhere over here. So it'll be interesting to see how strong this bar closes. I suppose there's only one day left, but it'll be interesting to see how strong we close and if we're able to continue the rally. I had a point on yesterday. I thought that trades like this, like buying of this bar, are pretty easy to take if you're beginning. But you gotta keep in mind you're in the middle of a trading range, and your 2 to 1 risk reward is way up here. So what are the odds we're going to get up there? Maybe 40%, but really not all that great. And if you do buy above that, you gotta, the problem is if you're taking trades like this, you're probably not very good at managing trades yet. So if you're taking this trade, you need to see this and just get out. If you're taking this trade, what you're hoping you're going to get is a bar like this, maybe even a bigger version of that bar, something like this. And you're hoping it's going to close somewhere up here and you're getting swept into a rally. And that's not happening here. And then when it's not happening, the smart traders exit and you see this. And if you bought, once you see this, you're probably thinking, oh, I'm in trouble. And when you're thinking, oh, I'm in trouble, you probably have to get out below here. And other traders know that. So I thought this was a good sell, a better sell than this was a buy. And you can take the sell. And traders have been scalping for 4 points. And this is probably a trading range, right? So if you sell below here, you get this as follow through. That's disappointing follow through. You probably have to exit above, but it doesn't trade above. So now you have a bar with disappointing follow through, but then you get this. And when you're seeing this bear bar, you're probably thinking, well, that's kind of a gift, or, we might continue down, but how far down are we really going to go? Because we just got this. So it's probably a trading range. So knowing it's probably a trading range, traders are probably going to scalp. And that's exactly what happened. They scalped out with 4 points. And that's basically where the low of this tail is, because traders sold here. They were disappointed in this. And when we kept going down, they figured it's probably a trading range. So they scalped out with 4 points. Yeah. All right. That's really it. That's the day.